Ron, portions of the market that are in bubble territory, if you want to call it, but others that are not so inflated.
Yeah, I mean, much of the market's not inflated,
Right.
although we have seen a broadening of late, and so markets, areas of the market that have been underperforming, small caps and the like, but starting to turn higher. Bubble's a very specific word, and it implies a lot of things, including public euphoria, heavy issuance of new stock, which we've not seen yet. We've seen a little bit of it starting to take place now, but
Well, there's certainly euphoria surrounding AI and.
Yeah, although
a lot. I mean, what do people go? How about NVIDIA? I mean, that's what people talk about. It's like CMGI 25 years ago.
Well, no, I mean, CMGI had zero.
I got you.
Business.
I got you,
traded company.
No, I understand that. These were not real.
Lycos that actually got sold to somebody else.
But the stock performed as though the stock was the darling.
Oh, absolutely. David Weatherall was a billionaire. I remember Sue Herrera and I sat with him at a Fidelity event and asked him what he was going to do now that he was a billionaire, and he said he was going to get a plane. So that was frothy, and that was even early. That was like 97, 98.
Yeah.
So bubbles inflating. I mean, we're in the infrastructure phase of the AI build out. We haven't reached the implementation phase, which is going to start coming, I think, in waves now. And you've talked to venture capitalists who are looking at the implications for healthcare, financial services, wide variety of different businesses. I was doing an interview yesterday at an event, and even not just the news business, but the legal business, that profession, everything's going to be touched by it. The question is, how do markets respond, and when do we see the type of euphoria that we saw between 1995 and all the way through 1999 into early 2000? I don't think we're quite there yet.
Did you hear what he said there? I've been waiting for someone on Wall Street to acknowledge this. Right now, the quote-unquote AI hype is really centric around GPU providers and semiconductor makers. We're not talking about the implementation of that AI for the companies that are buying these products from NVIDIA. They're going to need to start rolling out some AI products. And that is the next wave of the AI story here. I want to be pretty clear. I don't think AI is a bubble at all. Probably shouldn't have gave him that. But I do think the ship has sailed for NVIDIA and SMCI and these other stocks. Sure, can you make money on them? Of course you may make money on them, but you're not going to get an outsized return. NVIDIA is not going to 10x from here and turn into a $26 trillion company. That's just not going to happen. And I don't think AI is going away. I think AI is the biggest investable story for the next 10, 20 years. By the time this guy is my age, AI is going to be in everything and everywhere, most likely. At this rate of investment into AI that we're seeing, I mean, you better hope that AI is everywhere and a bigger part of your life. If not, NVIDIA and these other companies are truly in a huge bubble. I've talked about this over and over again here on the channel, but it's been a while, so I will refresh. I've been looking at companies for weeks now, probably a month or two now. You kind of lose track of time when you're having fun. Just to try to figure out what companies are going to have the most applicable real-world use cases for AI. The way that I go about looking at a company or evaluating a company is I say, number one, first and foremost, is this a company that will provide products and services to other companies? Or is this a company that is going to provide products and services for the mass market? Not for companies and for their employees, but for me and you, maybe average citizens. I have yet to come across another company that has a TAM, total addressable market, as large as Tesla. In fact, I don't think I'll ever find one. That happens to be FSD and the future Robotaxi network, as well as Optimus. The next question that I ask myself when I'm evaluating a company is it even possible? Are these companies' hopes and dreams ever going to actually happen? And if they do happen, again, back to the first question, what is the total addressable market? And then what's the valuation of the company in question? How long is it going to take to get to this end destination that they want to be at? And I keep coming back to Tesla as the best opportunity for applicable real-world AI. Again, and I will go back to my original argument. If AI is not a bubble, if AI is an investable area of the markets for the next 10, 20 years, multiple decades, then you're going to see products that change the world. And if you don't, investments into Nvidia's products are going to stop from companies, and this was all just one big bubble in the first place. If you go out on your road, on your street, to the mall, somewhere busy, go to a Walmart or something, if you ask people, what is Nvidia? They're gonna look at you like you just spoke a third language, okay? Nvidia is a $2.5 trillion company. If you ask those same people, who is what is Google? I'm referencing them like they're individual humans. What is Google? What is Microsoft? What is, all of these other companies that are trillions of dollars in market cap? Apple, Amazon, all of these companies, any $1 trillion company, they're going to be able to tell you what they are and what, products they sell. Those companies change the world. And I think Tesla will soon be a household name, much the same as those other multi-trillion-dollar corporations. I think Tesla's big moment is coming. Now, I know a lot of people, they're very short-term. If you are a short-term individual, let's say 1 to 12 months from now, you probably shouldn't be invested in the markets in general. You should probably go park your money in a 10-year treasury. But if you are someone that has a longer term time horizon, couple of years, 10 years, 5 years, 3 years for that matter, then, well, I think this video will do you some value. Now, I think personally, when I'm thinking about Tesla and Tesla's AI, is it here? Is it happening? Is it in front of our faces? Absolutely. V12 is changing the game. Elon Musk announced today, in which I went over in the last video, Tesla is no longer AI training compute. That opens up the floodgates of opportunity for FSD to evolve at rates in which you and I can't even fathom. With that said, the next question that comes to mind is, how long does it take the markets to realize this potential that Tesla has in real world AI? And that's the most difficult part. Is that going to happen next week or next year or 2 years from now? I don't know. But with the rate of progression we've seen with FSD, let alone Optimus, well, it could happen anytime. See, I think momentum is a very powerful thing in the markets, to the upside and to the downside. For an example, in 2022, stocks just sucked. The momentum was to the downside. You get a stock like Meta going from $300 to $88, back to $500. The momentum was strong to the downside and it's strong to the upside. And right now, Tesla is in a downside momentum state where it's going to take something to break the stock out of this downside momentum. And I think we do have the answer for that as well. There are two things that I can point out that will change this trajectory from negative momentum to positive momentum. I will also point out there's 14 different plausible catalysts that could happen in 2024, ranging from a faster than expected Model 2 to an FSD licensing deal to an Elon comp package to Tesla announcing layoffs, all kinds of different catalysts that could come, and those could definitely help change things to the better, right? Get the stock going in the right direction. But number one, that it's not on this list. We're going to throw that list away for a second. Number one thing that I think is actually currently going on that will get Tesla stock acting better, going in the right direction, is Tesla focusing more on profitability. Number one, the first thing that happened was Tesla's last earnings. They did not provide official guidance. That was important. You cannot have this narrative that you are this big unit growth company and then under deliver on unit growth while also sacrificing profits even more. At this point, you can't sacrifice profits anymore. The stock market is dictating Tesla focuses more on profitability. And I think that is what Tesla is shifting towards. Now, even more recently, Tesla raised prices on the Model Y in all of their major markets, the US, Canada, Europe, and China, by $1,000 starting on April 1st. Some people can say they're just trying to pull demand into Q1. I don't care. They're still raising prices, and it seems like that's probably going to stick. It's probably not going to be a price cut of $1,000 coming a month after April. Tesla raises prices $1,000 on my birthday, April 1st, to be more specific. Tesla also announced today that they are shortening Giga Shanghai workers' work week from 6.5 days to 5 days. That probably should have happened anyways, but I look at this like maybe they are slowing down production. Maybe they are focusing more on profitability. Maybe that will make Tesla a little bit more profitable. We really don't know, but I'm going to give the ball to Elon and give him the best judgment to say he's going to make the best decision for Tesla that makes the most sense. In theory, if they are reducing the work week and they're shortening the work week and lowering production of the Model 3 and the Model Y, presumably that would have a positive effect on profitability for Tesla, or they would just continuously keep cranking out vehicles and not shorten the work week. You could also make the argument that maybe Tesla overhired. Instead of laying people off in China, they're going to lessen the hours worked a week. And maybe that, again, has a positive effect to profitability. So these three things that we have seen in the last 3 months lead me to believe Tesla is now, currently, starting to focus more on profitability. That should start to get reflected, I believe, in the next quarter earnings. Maybe their profitability gets a little bit better. Maybe it doesn't. I do believe the commentary around profitability will become more important from Tesla. So that's number one. And good news is that is already happening. And that should really start to shift the stock in an upwards direction. Take a look at Apple for an example. Apple has not had positive growth in 4 quarters. The last quarter, they were positive growth year over year, but not by a lot. And look at Apple's stock. Apple's stock has done fantastic, even though they haven't really grown top line revenue at all in years. That's because their profitability has remained intact. So long story short, from the market's perspective, it's a lot more important that you are profitable and growing your profitability than growing your top line revenue. And why do the markets believe that? Well, if you're becoming more profitable, that means inevitably you'll start to give some of that back to shareholders via buybacks or dividends in the future. And that's really the core reason why profitability is important to the markets right now. Catalyst number 2 that could send Tesla's stock chugging in the right direction again is rate cuts from the Fed. Now, I don't know how many of you guys watched Jerome Powell's speech. I'm going to go out on a limb and say most of you guys. If you did not watch it, go back and watch it. Don't just read the quotes that came out, but actually watch the press conference itself. It sounds like Powell is begging for a reason to start cutting rates. Now, Powell really said 2 things that were notable that really took me by a little bit of surprise. And I'm going to paraphrase a little bit here. He said that there could be a sudden weakness in the economy that would cause the Fed to cut rates more than what the dot plot says. So more than 3 cuts in 2024. That really caught me by surprise because, they're expecting 2% plus GDP in 2024. The economy looks like it's great. And yet he's talking about a sudden weakness in the economy. Maybe he knows something that we don't, and that wouldn't necessarily be good for markets. Slight weakness with a lot of rate cuts would be great news. A lot of weakness with a lot of rate cuts, that's bad. In other words, look at 2022. The Fed was raising rates. Typically, when the Fed is raising rates, that's a good time to be in the markets. Look at 05 to 07. The Fed was raising rates from 0.25%, or 0% technically, to 5.25%. Stocks ripped faces off to the upside during that time. And the Fed was raising rates just steadily the whole time because the economy was doing well. Nobody thought a recession was coming. 2022, it's quite the opposite. The Fed started to raise rates a lot. You were actually negative GDP in Q1, Q2. What happened? Everyone thought a recession was coming and stocks sold off. So just in simple terms, if we go into a recession or there is recession fears like we've seen in 2022, that's a problem. If the markets are like, yeah, the consumer's feeling a little bit of weakness, but earnings are going to be fine and they're going to come in and companies are going to do well. Still, nothing's going to change there, but yeah, there's a little weakness in the economy. And the Fed starts to cut rates a lot. That's fantastic for Tesla. That's exactly Tesla's prime market environment. And we are currently expecting the first rate cut to come on June 12th, but I wouldn't be surprised if bad data comes out in the meantime and the Fed actually introduces the first rate cut in May. It sounded like on the press conference, Jerome Powell is begging for a reason to start cutting rates at this point, but he just hasn't had anything definitive enough to say the Fed should start to really cut rates. The other thing that Powell said that kind of, had my jaw drop a little bit when he said it, and I'm going to paraphrase again, he said that it's not a guarantee that we ever go back to ultra low interest rates. But there's a lot of uncertainty around that. So basically saying that if things were to kind of start to get bad, we're going to go back to 0% rates again. That's going to be a very good environment, good market for Tesla to be operating in. That's going to allow people to actually get reasonable auto loans. That's going to allow Tesla to start raising prices. And, something miraculous happens when you put stress on a company. When you put stress on a company, you force that company to really prioritize what they're spending money on, really prioritize becoming as profitable as possible. Like pound for pound, Tesla is by far the most profitable today they have ever been. The problem is the price reductions. If Tesla was still selling vehicles at $65,000 like they were in 2022, Tesla would have like 35% gross margins. It would be ridiculous. I'm not saying we're going to go back to that or, where we were at the high 27% gross margins, but if Tesla could start raising prices now that they are a lean machine, profitability will dramatically increase. And the same $1,000, for an example, Tesla just raised prices on the Model Y before may not have been that impactful to margins. But since they're so pound for pound profitable, efficient today is maybe the best word to put it, maybe not profitability, but Tesla is more efficient today than they were before. That $1,000 that they just raised on the Model Y could have a larger impact to the bottom line and to the operating or gross margin for Tesla. So those things are also very important to consider. I think you only have a couple of months minus any big news or catalyst that we get from Tesla before Tesla actually does start to outperform. Now, I think the big outperformance really comes from the recognition of Tesla's progress on AI. When the markets truly realize how advanced Tesla is and how close Tesla is to ultimately the robotaxi network, to AI initiatives, Optimus. I think Optimus is a lot further down the line than FSD and Robotaxi. Then I think that's when the markets start to realize Tesla is the biggest AI play out there. When again, back to what I said in the beginning of this video, when I think about, who is going to be a winner of AI, I think about products. Are they actually going to become a reality? And who are they going to be addressable for? How many people are going to be addressable for them? Is it just males? Is it females? Is it young people? Is it old people? Is it, one country or not the other country? Is it corporations? Is it people? Who is a product really built for? When I think about FSD, that is applicable to every human that drives a car on this planet. Now, it's not going to be in third world countries, so you're really applicable to like the US, Canada, Europe, and parts of China. That's what that market would look like for robotaxis specifically. And not even everywhere in China, but parts of China, definitely. That's a large market. That is billions and millions of people that could end up using Tesla's full self-driving technology. When you think about Optimus, that is literally every person in the world that could at some stage of their life benefit from having an Optimus robot. I think it would be a lot more commercial at first, maybe a FedEx or an Amazon or these companies that are like warehouse centric companies with big buildings. They would probably be the first ones to utilize something like Optimus, but that can also be applicable to nursing homes, help, your grandma around the house, whatever it is. There's a lot of specifics there. Do yard work. Who the hell likes to mow the lawn or do these other things? I don't. I have better things to do with my time. So from that perspective, it's only a matter of time before Tesla's AI moment is actually here. And I got to be honest with you guys. I become more confident each and every single day in Tesla's robotaxi network becoming a reality every single day. I mean, I was more confident today than I was yesterday on Tesla's robotaxi network actually becoming a reality. And I was more confident today than I was the day before. And I was more confident yesterday than the day before and the day before and the day before. And it seems like the last couple of months have really grown my confidence that this may not be a 5-year project down the line. 10 years down the line. This could be a 12-month project down the line, 24-month project down the line, where you actually start to get applications for the Robo Taxi network that are going out to like San Francisco or other cities. And I think that's when you not only get a change of momentum to the upside. By then, next couple of months, I expect momentum is going to become a little bit more favorable for Tesla, especially considering the stock's down quite a bit. If you're anyone that is, remotely positive on any of what we're talking about, AI, real world AI, robots, Robo-taxi network, or even just the EV market, right now is a better time to buy Tesla than it was over the last multiple years, let's be honest. Then I think a lot of people are going to start looking at Tesla in a different light, and I think that's coming in the near term. The next 12 to 24 months, though, I think you have your ChatGPT moment for Tesla where the markets really realize the potential here, and that's where you can see hundreds of dollars of appreciation in Tesla's stock price. Another good way to look at this is if you have like Nvidia, for an example. Nvidia used to trade at higher multiples than it does today. A lot of the time, the story, the progress, the initial rollout of products, you can have higher multiples at a company than when you actually start to bring in big dollars from those products. It's kind of crazy. Nvidia's multiples went from 60 to 30, yet the company has started to bring in some really big dollar hollers. And again, you can have a lot of momentum in a stock and quote unquote overvaluation or higher valuation of a stock before you actually get any dollars coming in from the product. So if we're talking about a robotaxi network in 12 to 24 months, then you could start to see Tesla stock actually reacting to that in the next 6 to 12 months, in my personal opinion. So I do think the days are limited for Tesla stock being down in the dumps. I think, again, the biggest question I have in the near term for the markets is what happens with the Fed, more specifically, what happens with the economy. I know what the Fed's going to do. If we see a little bit of weakness in the economy, the Fed's going to start cutting rates. If we start to see like, hey, maybe this could turn into a larger kind of downside movement in economic activity, you're going to see the Fed really start to cut rates before you ever start to see the moderate or deep signals of a recession that are actually in the markets. So that's the question. Little bit of weakness coming or a lot of weakness? A lot of weakness and a lot of rate cuts, that's bad, no matter which way you put it. Recession, that's bad. A little bit of weakness and a lot of rate cuts from the Fed, that's great. Even if inflation is a little bit higher, who cares? So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, check out that link down below in the description of this video as well. If you guys would like to come join the trading community, link in the description as well for that one. I will put that down there, but it is Michael Tyler on X. Pretty easy to find that as well. So you guys have a fantastic rest of your day, fantastic weekend, and I will see you in the next one.